Hi, my name is Ellie Hu. I'm a senior financial consultant. Today's topic is about different types of life insurance. Is there one that's specific, that's the best? And then also just how does all the life insurance work? Because I meet people all the time, and a lot of times people have a life insurance, but I ask them, what do you have? They have no clue, right? So I just think that that's really lack of knowledge and because of in society, we don't teach that. I was an accountant for over 20 plus years. Nobody taught me about life insurance. I had 3 financial advisors, and they sell me what they have. One financial advisor sold me a term life insurance. One financial advisor sold me a permanent life insurance, which is a whole life insurance at that time. So, is that good for me? Does that meet my needs? So I'm going to talk a little bit about that because I think that's where we really need to understand why life insurance, why you buy it, do you need to buy it? All these little questions, right? So I'm going to share my screen so that you can really understand from the drawing because I'm a very visual person. I think a lot of people are. And so that I hope that you can get more out of the value from here. Okay. So life insurance. Is life insurance necessarily good for everybody? Do you need to buy one, right? So this is what I say. Let's say if I'm Elon Musk, right? I billions of dollars. If I die tomorrow, is my family going to starve? Probably not, right? So people who are wealthy don't necessarily need a life insurance because they're considered self-insured. Who would need life insurance? If I'm very poor, right? I barely make ends meet. If I lose my money or if somebody died, I can probably go to the government program, right? Probably I don't need life insurance either, right? It's those people who are making decent money, and you put yourself, you think about it. Are you making decent money, right? Making decent money, and we depending on one or two income, and if one person income, for some reason is not there anymore, that will make dramatic difference in a person's life. That's when you need life insurance. Okay, so that's I would say probably 80-90% of people need life insurance, right? Because you don't want to go from middle income to poor, or you go from wealthy to poor. None of that. We don't want that, right? So I think it's just what does that mean? And then people say, well, I have insurance to work, right? Life insurance to work life insurance. It's called group life insurance, right? Group term life insurance. So what does that mean? If I work, I have insurance. If I don't work, get laid off, change job, then I no longer have insurance, right? So then what if that time I don't have insurance, I get hit by COVID? That's, that time when there was COVID, something could happen to my income, right? Because something happened to me. So work life insurance will only be more like a supplemental. It would not be something you rely on because you cannot be guaranteeing yourself currently that we're going to be working for the rest of our life for any company, right? Also, too, as you think about work life insurance, is probably give you 1 to 2 times your salary. 1 to 2 times, is that a lot? If I use 100,000 as an example, I make 100,000, and they give me 100,000 if I die, my family gets 100,000. So how long can they live on? 100,000 is a 1 year, right? 200,000, right? They give me 200,000, I live on 2 years. It doesn't matter if I don't have anyone to provide. Like I don't, my husband, he's fine. If something happened to me, he will be fine. Let's say he works, right? But what if I have kids? Then that makes a big difference because how would I pay for my kids? Go to now one parent's not there. How would they send to school? How would they, be going to college later on, right? All of these things. So that's why usually if 1 to 2 times you base only on your work salary and work insurance, that probably not going to be enough. That comes into life insurance, right? So we're going to talk about different types of life insurance. There are 2 big categories. One is called term, one is called permanent. Term insurance is more like you rent. You rent, you don't own it, right? So term insurance is like you rent for a period of time. Usually it's like 5-year, 10-year, 20-year, 30-year type of thing. Okay. So there's a end point to that, end of the date, right? So if I'm 30 years old, it will end at 60. So if I die before 60, my family gets 500,000. But if I forget to die at 60, then my family doesn't get 500,000, right? But who wants to die, first of all? Second thing is, if I do die, 500,000 is better than the work is only 1 to 2 times salary, right? That's always good. But what happens if I'm 60 and I forget to die, right? Then all the money you pay is gone. So this thing is cheap, right? But you use it or lose it. Just like car insurance, okay? Now, permanent insurance is for what? Why people say, oh, permanent insurance is so expensive, don't buy it, right? Why? I use the analogy of buying a house. Is buying a house cheap? No, you got to put down payment, right? You had to put in property tax money. You got to put in maintenance, right? If your water heater broke, if I'm renting, I just call the maintenance company at the renting place, right? Leasing office. They will come fix it. But if you own that house, well, sorry, if the roof got, damaged through the rain, you got to fix it, right? So that's why home ownership is not necessarily cheap, right? But home ownership is worth it is because eventually you own that, right? Same thing here is you own that. You will always own that, right? Because we're all gonna die. Unfortunately, I don't know anybody else who says they're not gonna die, right? So 121, let's say you buy at 30 years old, goes all the way to 121. So let's say this one costs you a little bit of money. This may cost you a little bit more, right? Because obviously it's going to be a longer period of time. It's not from 30 to 60, it's 30 to 1 to 21, at least twice as long, right? And we don't know how long we're going to live. So for sure, we're going to die, right? But then there's a pocket here. That's a cash value. So what does that all mean? Meaning that you put in the premium, right? This dollar you put in there, but there covers cost of insurance and the investing in this side, cash value, okay? And what does that do? Let's say, I give an example. Let's say I put in $250. Okay, give an example. And this maybe, let's say 100. And don't take my number because, really depends on the age, the person, female, male, all these things. I just want to give you an example, right? So this costs 100. 250 minus 100 is 150. So monthly, this 150 will earn an interest. Okay, so that's the money growing for you. How does it earn interest? If it's a whole life, it give you usually about 2 to 4% of interest. Plus, if there's a dividend, they also can get dividend, right? So that's good. 2 to 4% better than what the bank giving you right now. Right now, giving you 0%, right? There's also one called universal life. Typically goes with the central bank. Central bank is high. If inflation is high, it might go higher. But right now, currently, it's between 3 to 5%, let's say, right? Doesn't give you dividends, so 3 to 5, 2 to 4, just up to you, which one you think, right? Which one you like. There's also one called variable universal life, which is like a mutual fund, right? Go up and down the market, okay? So if the market is good, you make good money. If the market tank negative 40, you also lose money. The last but not least is index universal life. Index universal life, let's just use any index account, right? And then this is you. If index account give you 10%, you might get 10%. Index account give you 15, you might cap at 10%. And then index account is negative 40, right? Then you will be what? Possibly zero, okay? Meaning that you don't lose money, typically zero, okay? Some company a little bit higher, but that's, typically zero, so meaning you don't lose money in here, right? So that's how these policies work. Now, let's talk about why there's 4 different kinds of policy, what is it good for? Because typically with a term insurance is that I just provide death benefit, that's it. But the whole life or universal life, variable universal life, index universal life are permanent, right? I'm gonna die between 30 to 121 or whatever age you buy all the way to 121. What could happen in that time period? One is I die all of a sudden, then my family gets 500,000 tax-free. It's good, right? Because how can you get tax-free any other way? Unfortunately, we're all gonna die, right? So that's one, it's a protection for the family, for our loved ones. It's gonna be able to go on without having to do GoFundMe account for me. They don't have to worry. They can go school. They can still have a life that they didn't change because of me, died, right? But what if I get sick? That to me is why I buy life insurance. When I get the whole life insurance, my financial advisor never, told me about long-term care. So I have 80 some years old. So yes, my mom is 80 some years old. So if I die, I want her to be protected. But most likely I'm going to outlive her, which I did, right? So if I outlive her, who's taking care of me, right? But that whole life is for death benefit. So it didn't serve my need. So you can add a long-term care rider to that policy if the company provides it. Okay. So let's say I buy a whole life, I add a long-term care. So that 500,000 become a long-term care policy as well. So I can convert that. And universal life, typically you can do that. And the index universal life, you can typically do that. Right. So then you just turn a permanent policy into 3 uses. One, if I need the cash, I can access the cash. One, if I wanted to access because I get sick. Terminal illness, pretty much, most companies will provide that. So then I can access the money ahead of time. Let's say 500,000, I might be able to get $250,000 out to pay for my medical bill, right? There is also company provide chronic illness, critical illness. These things are very, very important. But more important is I really like the long-term care portion, because right now, more and more people need long-term care, and it's quite expensive. If I have $500,000, at least I'm not paying dollar for dollar for that $500,000 of care if I need it, right? So that's how this overall policy work. And I will touch more upon other topics, but this is a quick drawing just to make it easier for a lot of people because they are confused. And I hope you like the video. I hope you find it useful, and I will talk to you very soon. And if you like what you learned, I'd love for you to hit the like button and share this video to somebody you think will be useful. Thank you so much.